Hi, this is Mo Tabesh from Numetrica City Inc. Today I'm going to talk about HST. There's a lot of entrepreneurs that have questions on HST. It's confusing to them. They neglect them, or they don't understand. Not that they neglect them, they just don't understand. So what is HST? HST is a tax, service tax, that we charge for our services and products. So the way it works, number one thing you need to know, there's a threshold. So if you ever go over $30,000 in your invoices or your product sales, you have to charge HST. So the other thing you need to know, we talked about the threshold, $30,000. Now, sometimes, let's say you've already registered for your HST. So at this point, while you're registered for your HST, you cannot wait and say, when I reach $30,000, I'm gonna charge HST and file HST. So whenever you're registered, you have no choice. Even if you make no sales, you have to report your HST. Which would be, don't be afraid, which would be sales 0, HST collected, obviously 0 because you didn't sell anything, HST paid. Now, if you were a startup, so you probably paid for some services that you needed to operate your business or open your business. You paid professionals, let's say lawyers, accountants, you bought equipment. So you have to, you will get those HST back. So those in the accounting world are called ITC. So sometimes you may hear it, what's the ITC, or CRA calls you, what is the ITC on this? So basically what it means is the HST that you have paid out. So that's the ITC portion. Now, another thing that I've experienced a lot is companies come in, they've registered, they've incorporated, they've got a business number, and they start working, and they're paying HST, they're collecting HST, and then they come to me and say, Mo, can you file our HST, or can you look at our HST? So the first thing we do when we get clients, we get their authorization so we could look into their CRA account. And when we go to their CRA account, the HST is not set up. So we call them, we say, Mr. Nice Client or Mrs. Nice Client, your HST is not set up. They say, oh, but I have a business number. Yes, the business number is your general business number. If you've incorporated, it's probably for your corporate taxes. So sometimes you have to call CRA, say, activate my HST, even activate my payroll. So what happens now, let's say you've incorporated February 2nd, and you came to see us in June or July. From February 2nd until June and July, you've been collecting HST, you've been paying HST. So you come to me and says, okay, we paid a lot of HST. Can you file it for us? We're gonna get a huge refund. So we would have a bad news for you. We would say, well, no, because you have not set up your HST. So if you call CRA, they will activate the HST for you right on that date. Sometimes they can go back. They can go back a few months, but that requires you and also CRA to ask you for your invoices that you've paid out or bills that you've received. So once you do that, they may go back a few months and set up your HST, let's say a month or two, before the date that you called them. So what's gonna happen to HST that you've paid out or HST that you've collected? Well, those gonna be, they call them HST sundry. So the ones that you've collected and you were not basically allowed to pay to CRA, they become your income. So if you had sent an invoice for $1,000, there was $130 of HST. So before your sales was $1,000, now your sales is $1,130 because that $130 that you were not eligible to either pay or collect becomes income. Same thing with your expenses. Let's say you paid someone for $1,000 for their service. And there was an HST on that. So before your expense was 1,000, but because you were not allowed to pay your HST, it becomes 1,130. So your expense from 1,000 goes to 1,130. So it's extremely important in your business to pay attention to your HST, to your payroll, to your business numbers, the periods. Am I allowed to collect HST? So these are extremely important. Unfortunately, we see these after clients come to us, ask for our help, and then we look into their account and we see that it's not set up. So once it's set up, then it's perfect. We go forward. So speaking of once it's set up and it's perfect, you can file your HST on a yearly basis. You can file it on a quarterly basis, and you can file it on monthly basis. In my opinion, the best is to file it every quarter. I mean, we file HST every quarter for our firm too. The reason is, again, you don't want to wait for 1 year for sure, because if you owe CRA HST dollars or HST money, and you wait for 1 year, that number becomes huge. So let's say, at the end of a year, you have to pay 30 grand. And most businesses are not good with their cash flow. So if you haven't put, including myself, if you haven't put that money aside, it's just a habit. Then you have to go borrow it and pay that HST. So if it's 30 grand. It also works if CRA owes you money. So let's say you didn't file your HST, and then for what actually you did file your HST, but you did it on a yearly basis, and you submit your HST to CRA, and your refund is about 10 grand, 20 grand, 15 grand. In that case, you will definitely get a call from CRA or a letter from CRA saying, whoa, there's 10 grand, let us examine your book. And this is not an audit, it's called examination. So basically what they need from you probably is your highest invoices, like 10 highest invoices that you would send to them. You would send them a GL listing. Basically, that's the list of every HST that you've collected or paid. You get this from your accounting software. And then they review this, and hopefully everything is good, everything matches, everything ties in, they're all legit, so you get your refund. But you don't want to go through that, because that probably gonna take a few hours of our time, because we have to go find those receipts, organize them, print the GL, and then submit all this to CRA. So it may take about a day or so. And then time means money, right? So you want to avoid any situation like that. So now that we talked about HST, the filing, quarterly method, whatnot, the other thing that I would like to really emphasize for I said we're not good with our cash flows. So what helps with cash flow HST wise, because face it, it's 13%. So that's not a small chunk of money that we could basically grab it. So one of the things that I advise clients to do is to set up a savings account. The banks, actually most banks know this, and they call it trust account, because you want to park the money there. And the way CRA looks at HST, rightfully so, they would say, this is not your money. This is our money you're collecting on behalf of us. So a lot of people look at that HST as, I sent a bill for 1,000 and I got 130 HST, so my income is 1,130. No, your income is 1,000. That HST belongs to federal government or provinces too, because HST basically means harmonized sales tax. So they mixed GST and HST. Portion of it is provincial, portion of it is federal, except Quebec. Quebec has QST and GST because they manage their own taxes. They don't want to harmonize it. So the best thing to do, set up a savings account, trust account, each time you bill a client, transfer the portion that was HST into that account. So what happened is, at the end of your filing period, at least you've saved the HST that you've collected. So let's say you've collected about $5,000 on HST. At the same time, you've paid out HST. You remember we called it ITCs. So let's say you have $2,000 in the ITC. So you saved the 4, you've paid out the 2. Now the balance is $2,000. So you pay this to CRA. The other $2,000 which you have saved, now you could actually flow it back to your company, or let it sit there as, for an emergency fund or for a rainy day. So or let's say you were going to buy an equipment, you can use that. So indirectly, not only you have the money or the cash for HST, you've also saved some funds, which can help your business. But if you didn't do that, then you would have owed $2,000 in HST. You've already spent the 4, so you have to pay the 2. So if you magnify this number, let's say your business is great, you're collecting a lot of HST, so that number, as you can imagine, would definitely grow. So, and I guess next, how to file your HST. For our clients, we do it. We go on CRA website because we have access to their HST, payroll, corporate taxes, whatnot. So we file their HST online. But let's say you were filing it yourself, or you actually want us to file it and we don't have access to CRA. So whenever you register for HST, you get letters from CRA. Number 1, say, okay, thank you for registering. This is your HST. This is your filing period. So, and these are your codes. They give you 4-digit codes. You put in the 4-digit code, and you can file it. So with this, actually, anyone can file it. So you can go on CRA website. You go there. One of the items that will show up, which we can show you, I guess, later on. It says HST net file or net file HST, something like that. So you click on that, and then the window pops up. So it wants your CRA number, your filing period, and it has to be exact. So let's say January 1, 2020 to December 31, 2020. So if the date is missed, you get an error. So you put that in, and then it says, okay, what's your code? Actually, you put your number in and then code second. Then you get access to the filing period, and then you get the windows for, how much did you collect, how much did you pay, and what was the sales, and then submit. So right when you submit, you will see a button that says make a payment. You could click there, it connects to your debit account, and you can pay. But if you do this, it's going to be there. Basically, you have to do this each time. The way we do it, the way we teach our clients to do it, is to log into your bank and then look for tax filing. So when you find your tax filing, it's not just HST, it's payroll, it's corporate taxes, and it actually has varieties. So HST could be, I just want to make a payment. The other one is, I'm gonna file my HST and make payment. Or one of them would say, I want to make arrear payments. So, and these are extremely important because, as you can imagine, things are complicated. So basically, if I was CRA, it's like, well, what is this money for? Is it for owing now? Is this for the future? Is this for the past? So if you go to CRA, you will see that, for example, here we have federal GST, HST balance due. So this is obviously, as it says, balance due. So you have filed your HST before, you owe money to it. So you can park it there, which is actually not a bad place, because let's say even if you put it for last year, at least the money is there, and then we can switch it. As accountants that have access to your accounts, we can switch it. So the other one is GST payment only. So this is basically means this is current, or it could even sit as installments. I'm thinking here. The other one is HST return payment. So with this one, federal, GST, HST return payment. So with this one, you can file and make payment. So basically, you would go to your bank, tax filing, add, and you add your business number, and then you get options. You probably get 3 pages of options because there are so many things that corporations can pay to CRA. So one of them is return and payment. So return and payment basically means I'll put my sales, I put my HST collected, I put my ITCs, and then, calculate, balance pops up. Are you sure, you owe 50 grand to CRA? Yes, I'm sure, I have to pay. And then, so then say make payment. It even asks for a date. Actually, in the in this option, return and payment, it asks for the period too. So which is perfect because this number gets submitted to CRA. So then CRA has your payment for the period, which is extremely important because let's say you file your whole year. So quarter 1, quarter 2, quarter 3, quarter 4. So quarter 1, make 10 grand, 10 grand, 10 grand, 10 grand. So when you file your tax return at the end of the year, CRA expects 40 because you said, hey, 10, 10, 10, 10. So if this number is way too much or too little, you may get a call. Say, hey, we've noticed that, the income that you reported does not match the income that you reported for HST purposes. So you want to pay attention to that. So another topic on HST, again, I guess it's a complicated thing. While we are here, actually, I'm going to give you a phone number. It's called HST GST technical ruling, or technical ruling, let's say. So if you're ever confused on an HST, let's say, am I supposed to charge HST? Let's say you're a dentist and you're doing a root canal and you're wondering, should I charge HST on this or not? Or I don't know, I'm selling something, I'm selling goods to United States, am I supposed to charge HST on this or not? So this phone number, 1-800-959-8287, this is answered by, experienced CRA HST staff. They're very knowledgeable. You ask them a question, they give you the answer right away because I guess they're the experts in HST. And I've seen the books on HST. They're pretty big. So if you ever have any question, call us, call them, Google it, and you get the answer. So another point that I want to talk about HST, there are 2 methods for HST. There's the quick method of HST. There's the standard or accounting method of HST. I probably talked about this in previous videos, I think. Or if not, I've probably written a few blogs on this. So some companies, for them, it's better to file on quick method, mostly IT consultants. So if you're an IT consultant, basically you have lots of income and you have very little expenses, especially if you work at home. And you're under $400,000 of sales. So then you can choose a quick method. So in quick method, basically saying, I have little expenses. I'm not going to go through, calculate all this HST. So CRA would say, okay, ignore any HST that you have. So ITC is gone. The HST that you collect, give us 88% at the time of this video, because it could change. The only ITC that you're allowed to claim is if you buy any capital asset. So let's say you had to go buy this big server and there was a big ITC on that. You get to claim that. Actually, there's also a bonus of $300, so yearly. So $300 credit if you go quick method, and then HST on capital assets only. And you pay the balance. And there's actually a little calculation in that. It's not as simple. You have to add the HST to the sales and then calculate the 88%. So now that we talked about paying HST, basically paying all this amount to CRA, not paying it when you're filing it online, because you have to set that up each time. We talked about how to go to your bank, find tax filing, go through the steps and set it up. And once you set it up, then when you go back, let's say, file for something, you see the numbers. Example here, balance due, payment only, return and payment. This is what I'm going to talk about, since we're talking about making payment to CRA. Payroll. So a lot of people say, how do I do this? I had a client lately that was not in his city of business. So normally he goes to a bank, give it to a teller, say, pay this. And we said, why don't you just, file it online? Because we cannot pay it for them. And actually, for the payment, for payroll payment, if you're on WagePoint through QuickBooks Online, or actually separately now, WagePoint will pay it for you, which is fantastic. So you save a ton of time. And also because they pay it for you, they pay it right away. Sometimes even if you're good at making payment, we forget, 10% penalty, and then there will be interest is not, I guess, not a good thing. I'm trying to avoid interest and penalties at all time. So to set it up, again, same step, you go to your bank, find tax filing, enter your CRA business number, find the right account. So in this case, we have added federal payroll deduction, regular quarterly. So basically what it does, when we issue our payroll, I go to my bank, which is Royal Bank, RBC. I recommend them. So set it up. I click this. So when I click that, pay comes up, which is that one. And then, so then one window opens, new window. Basically, this is for which month? Because when we send payroll, it's monthly. Sometimes CRA gives you an option to file it quarterly. I suggest not to choose that, because payroll taxes, could be high. Let's say $3,000 each month. And I would say, oh yeah, I'd like to file it quarterly. But then it's 10 grand. As we talked about it, cash flow, you have to have a strong discipline to have to monitor your cash flow. If you do not have a strong discipline or mediocre discipline, opt for paying it right away. Do not let it sit. I know I'm like that too. Hey, I'll let it sit, I'll pay it later. Later will never come. But you spent right away. So once you set it up, the window comes up, what year, what month, how many employees, what's the gross payroll, so we add that in. So we add the number of employees, what was the taxes, so basically CPP, EI, taxes that employees paid, your portion, which is payroll, then EI, so you add them, let's say it comes to 5 grand, and then it says what date. Normally they're due 15th of the following month. So I would suggest, actually, if you're going to make a payment, do it as soon as PD7 is ready, because with the bank you could say make this payment on the 15th. So the bank will not take the money out of your account right away. They will pay it on the 15th. So fantastic. So basically you're not late, because if you're late, there's a penalty. So we want to avoid that. And on the payroll, it's not high. That's the reason, CRA does that. And so I guess, number one, people won't forget. And number two, this is not your money. Just like HST, also payroll is not your money. This is your employees' money that you took it in trust and you were supposed to pay it to CRA. So you should do that, obviously. And I'm sure you do. So the next one, It's for balance due. So let's say we file our payroll, we paid the PD7, and CRA comes and says, hey, you missed this. Or you owe us, I don't know, $2,000, $3,000, whatever. So you don't have to go. So if you're making it online, you don't have to go through this regular quarterly. You will go to, federal payroll source deductions balance due. So this is, for previous periods. Another thing that you could add to this would be corporate tax. Corporate tax would also be, a payment only, which is current payment or installment, or you could choose balance due. So my corporate taxes from before, and do this. All right, so I guess this wraps up our HST payroll, HST filing, HST, I guess, filing periods, when to charge, what's the date, we covered all this. So a bunch of questions, I guess. Can you charge HST without an HST number? Definitely not, because, if you forgot to put it on your invoice, maybe, but no, because again, we talked about it, you're acting as an agent for CRA, for federal government, to collect this HST and send it to CRA. So if you do not have a number, that means you maybe did not register for your HST. So do not charge HST if you don't have HST number. So call CRA, ask for that, and put it in. Because some people are pretty smart. They ask for HST number. So actually, if you even get a bill, ask for HST number, because how do you know? The payment that you're making is going to go to federal government. Again, you paid this to federal government, so you want to see that evidence. HST to sales that you're making outside Canada. On sales that are basically, you have a client in San Jose and you're doing business with, you do not have to charge them HST. So you would just charge the Canadian taxes. So when you file we had a client actually, he used to do consulting work in the US, and his sales was around $400,000, which was pretty good for a consultant. And we used to collect HST for him, rightly so, because he had Canadian expenses. And we had get a call from CRA. Not that they wouldn't give it to us, they just wanted to be clear. So we said, yes, services are done outside country, and so no HST on that. And then the services, or the expenses that he incurred in Canada, these are his expenses. So, therefore he had to receive his HSTs. Now, that brings us to another question, which is pretty interesting, because a lot of people that are watching our videos or we talk to, they're influencers, they're YouTubers, they do a lot of business in the US. So what you want to watch out for is the US sales tax. So this is what I've learned recently. They have a rule that either $100,000 of sales, $200,000 of sales or so. So let's say we stick with 100,000. So that's one requirement. So if you meet this, you have to charge U.S. state sales tax. The other one is number of transactions. Most states, if you go over 200 transactions, you have to you have to register and then charge U.S. sales tax. There are companies in the U.S. that can register your business, and so you get your U.S., for example, let's say you sell to New York. So they register you in New York. A lot of you, if you're selling through Shopify or Amazon, sometimes even Amazon or Shopify would give you warning. Say, U.S. sales tax, U.S. sales tax. So basically what it means, you've passed that threshold, so you need to register that. And so that could probably be our next topic to talk about this. There are different apps to help you with this U.S. state sales tax filing. So thanks for watching this video. I'm sure it's not a very delightful topic, HST, payroll, CRA, payment, filing, what do I do? But it's, again, as a business owner, you need to know these, pay attention to these things. If not, let us know. Again, thanks again. Have a great day and see you on next episode.